In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, shame on you. Go to iTunes or Apple Podcasts, type in Old Dogs, DAWGS, find our podcast and subscribe. Well, we got a great show for you today. This is an amazing young man who is a real estate investor, but he can kind of invest from anywhere in the world. And hopefully he's going to get into more details on that. But I'm talking about a young man named Josh Miller. And after 10 years as a data engineer for a Fortune 3 company, Josh Miller left to pursue full-time real estate investing. Utilizing his data skills, he acquired 120 rentals in 18 months. That's amazing. And purchased and sold hundreds more. In 2019, he founded Go for Close to help fellow investors achieve the same success by providing them with a full-service marketing agency to acquire off-market properties. Wow, Josh. Well, welcome to the Old Dogs REI Network.
Hey, I almost feel like howling at this point. Thank you so much for having me on. This is really exciting.
Well, this is great. You know, you're obviously not an old dog, but, we let young pups come on all the time. We learn a lot from young pups. So I appreciate your coming on. Well, Josh, I'd really love to hear just sort of your background story, where you came from and how you eventually ended up in this crazy real estate world.
Yeah, so I actually grew up all around the world. I was born in England. I lived in Israel, a little bit in Australia, the US, and finally ended up in college, graduated, got that corporate job, fell in love with data. I had the job for about a year when I remember my uncle from Vegas. This was 2009, 2010. Calls me up. He was a realtor, and he calls me up and he says, "Hey, Josh, this whole house, this whole street, you can buy houses here for like $20,000-$30,000. I think you should buy one." So I did what every smart guy does with his $20K. I said, "No, thank you," and I went and bought a car instead. But that really stuck with me. And over the next couple of years, I kept looking at those home prices go up, and 2013 rolls around. And I'm like, man, I missed the boat. Man, I should have. Too late at this point. But you know what? Maybe it's not. So 2013, I'm still working my corporate job. I said, maybe I'll try this real estate thing out. And I went and bought a rental, and I didn't know how to do it. I didn't really know what I for sure didn't know what I was doing. And I went on to this website, auction.com, and just to me, don't do what I did. I bid on a property I live in Los Angeles, and I bid it out of LA because everything here was too expensive for me. And I was the only bidder, and I got the property, and they say, congrats, you won. Now pay us the cash. I was like, well, I don't have it was like 130K. I don't have 130K. So I ended up finding a loan, and no one else wanted the house. So auction.com was cool enough to wait till I got my loan approved and all that good stuff. So then I have the house. It's all approved. I still haven't seen it. And I was like, well, I guess I got to rent this thing out. So again, I did something that I don't think is illegal and you're not supposed to do, but I put an ad up in Craigslist, and I said basically, house for rent. If you'll take care of all the repairs, I'll give you $200 off a month. And a little bit more, like never call me and you get the $200 off a month. And that's ended up how I acquired my first rental. And
now, where was it located, the rental?
It was located near Bakersfield.
Oh, okay. Got it.
Yeah. And then honestly, I'd never seen it until I showed up for the open house to show all the people who replied to my Craigslist ad, and was fortunate enough to get a contractor. And he's like, yeah, I'll never call you. And sure enough, it's been 8 years, and I've probably talked to him maybe 2-3 times. And the house is in better condition than when I bought it. And surprisingly, the house was in perfect condition. It was almost a new house when I bought it. I just got very fortunate there. But I was really happy on my corporate job, so didn't really do any more real estate. I was traveling the world. I honestly had an incredible job, and 2016 rolls around, and my mentor at my job, he partied for him, and then 6 months later, he passes away.
Oh, no.
Yeah, and I remember going to his funeral and crying and just thinking that, man, this is so sad. I love the man, and he spent his entire life working, waiting for the day to retire and spend time with his grandkids and his kids, and never. Yeah. So
oh, man.
I decided then and there, that was it. I'm not going to work for the next 30 years. My job offered a pension and all this good stuff. I was like, no, I'm not gonna do that. So I said, I'm going to get serious about real estate. And that's what I did. I decided to create a business, get an LLC, and just go down that track. So again, not knowing any better, I was looking for the best way to acquire off-market properties. And I ended up setting up a website and some Google ads, trying to run them in Los Angeles. Crazy expensive to get any good leads here. So I was like, well, what if I go out of my city? What if I go out of my state? What if I just do the whole country? And I get this lead come in, a lot of not really great leads, but finally this great lead comes in from this little town in Wisconsin. I think population like 1,000 people. And again, you should never do this, but this lead came in a small city, so you shouldn't be buying properties in small cities. I know that now, but didn't know any better. And the homeowner is like, hey, yeah, I need to sell my property. I'm like, how much is it worth? He's like 100. I'm like, how much do you want to sell it for? He's like 100. I'm like, well, that doesn't sound like a great deal. He's like, okay, I'll sell it for 90. It's like, let me look. So I contact a realtor in that town. He said, yeah, it's probably worth about 100. So I go back to the homeowner. I'm like, you got to come down from 90. He's like, okay, I'll sell it to you 80. This goes back and forth, and finally he's like, okay, I'll sell it to you for 70. And I was like, no, you know what? It's actually in too small of a town. I don't think I can buy this. He calls me up the next day. Okay, I'll sell it for 60. I'm like, no, I really don't think I can buy it for 60. He's like, okay, I'll sell it to you for 50. I'm like, well, what's going on? He's like, well, we owe some back taxes, and we're going to lose the house at the end of the month. I was like, really? Okay, let me see what I can do. So turns out, yeah, he did owe a bunch of back taxes. He was going to lose the house. So I said, okay, I'll give you a few K more than what you owe, and I'll see what I can do. He's like, that will be a lifesaver. Thank you. We just need some moving costs. So we ended up settling on something like, I think it was like $25,000. This was a while ago, so I don't know the exact numbers, but it was around $25,000. I didn't have $25,000, so I went on Bigger Pockets actually, and I created a post like, "Hey, I got this great deal. Anybody want to be my private money lender?" And somebody responded like they shouldn't have. They really shouldn't. But somebody responded and like, sure, I'll be your hard money lender. I want 10%, no points. I didn't know what points meant, but I was like 10% for, yeah, $2,500. Sure. So we created some documents on the spot that I'm sure didn't mean anything, but we signed them. And I ended up using his money to close on that property. I ended up calling the realtor up of like, okay, I bought the house. Will you list it for me? And the realtor's like, how much did you buy it for? And I told him, he's like, well, yeah, the house is worth 100. How about I give you 80 for it? And I think I was all in at like 30,000. I was like, sure. So the realtor ended up buying it from me, and I pocketed a little over 50K, and that was my first like real deal. And that gave me the confidence to really create a business out of it. And I was still working my job, but I started hiring people. My first hire was a sales guy. I was like, I never want to do the sales thing again. And started buying, and I think we ended up closing properties in over 30 states, 33 states. We'd buy them, we would get them inspected, an appraisal or a BPO, close on them, list them, and then repeat. This went on for about a year, and I was getting really nervous. I was working crazy hours because I was still working my normal job, and I was exhausted. I was stressed. I was using a lot of private money. So I thought, you know what? I need a new strategy. Found this thing called rental properties. I was like, this looks a lot more passive. This is what I should have been doing from the start. Spent about 6 months trying to pick a city. Finally, by mid-2017, I found Omaha, Nebraska is the city I decided on. Had never been there, but the numbers all look good. So, started building, stopped my nationwide wholetailing, and started building up a rental portfolio in Omaha. 6 months into it, finally was able to like have the confidence. I was making way more money from my rentals than I was from my job. So I left my job in January 2018, and about a year and a half later, I had over 100. I think it ended up being about 100. My goal was $40,000 a month. I really didn't care about how many houses it was. I wanted that $40,000 a month. And after a year and a half, I had it, and it was like, okay, I'm done. So we sat on those houses for about a year before I realized that real estate rentals isn't exactly passive either. By about 2020, I was a little fed up with them. I had always been investing in crypto and Bitcoin and other things, and decided to make the bold move of pretty much selling almost my entire portfolio, buying Bitcoin, and you can actually get passive income from the cryptocurrencies as well. And so I've just been living off of that. So I feel like I went really long on that, but yeah, that's how I got to where I am today.
Okay, well, I got a ton of questions here. That is an amazing story. It sounds like you sort of automated the process though while you were doing that. I mean, how are you getting all these leads in? What did you do to generate the number of leads? And the guy that you had hired that came in that was a former sales guy, was he handling and screening and doing 90% of that as these leads came in?
Yeah, so I realized early on that, especially working a full-time job, and I think that was my savior, was I couldn't possibly do it all myself, I could only focus on one thing. So I decided I was really good at data, and I would just focus on the marketing and data side of things, trying to generate off-market leads, and everything else, talking, the sales, the acquisitions, the dispositions, the transaction coordination would all be handled by other people. So I just started hiring. Anytime I made money, I would hire a new person to handle the different positions, and I would just keep focusing on marketing. So initially, when I was buying all the properties across the country, it was all through Google Ads. It was all PPC. That was my one strategy, and we just did a lot of it. When I moved over towards Omaha, Nebraska, it's a smaller community, and the PPC costs were going up. So at that point, I decided to branch into different channels. So at that point, I started focusing on the data, and data is incredible as far as what you can pull of homeowners to really find those distressed ones. And we started doing everything from direct mail, cold calling, text messaging, ringless voicemails, email, but not so much quantity, but more quality, really trying to find and narrow in on the right zip codes, the right neighborhoods. And so we didn't have to have a large budget. We could really say, okay, 95% of the deals all come from this one zip. Let's just focus on that zip, and really hone in on the right type of homeowner who's likely to sell to an investor.
Were these like C-class, B-class properties?
Most of them were C-class. We did pick up some A-class, B-class. What I know now is, man, there's so much that I wish I knew now. But yeah, the C-class look really good on paper. But what I know now is that they might look good on paper, but A-class is really where I would have wanted to be if knowing how on paper they might look worse, but they actually do better.
Yeah, sure. I mean, after you consider the headaches, the turnovers, the all the things that go with tenants that sometimes are in the C eat into that bottom line. Plus, they tend to turnover quicker, and so just the cost of a turnover can eat up all of your cash flow for that property. Now you had all these 100 some odd properties. And you sold all those, right? And so with that cash, that's what you put into Bitcoin, right?
That's correct. Yeah. So I kept about 15 of them just for the depreciation and the tax write-off. I mean, I love real estate. It is incredible how many advantages it has. And, last year I had over $500,000 write-off from the depreciation alone, which is incredible. I mean, it's just blessing after blessing that real estate gives. But at the end of the day, where I'm in life is I just wanted that truly passive income and being out of state. And one of the biggest lessons that I learned was it's easy. Well, I shouldn't say it's easy, but it's one thing making the money, and that's buying right. But truly the difficult part is the property management. And I was never successful in finding a great property management company. I did it myself for a while. I tried to hire out, but one thing that I could encourage everyone listening is if you're looking to invest out of state, more than the numbers, more than anything else, is it's making sure you can find a good property management company before really diving in.
That's key. That I think is 90% of the deal, because they can make or break you.
Yep.
And I've dealt with the same challenges, and finding a good property manager is not easy. But wow, that's an amazing. Okay, now I'm just totally deviating a little bit here. Okay, how do you get cash flow out of crypto?
Yeah, so there's a number of ways you can do it, but it's called staking. So essentially, people who want to leverage need crypto, whether it be whatever crypto you're doing. They need to use somebody else's in order to leverage. And so there's companies set up where you can essentially loan your crypto out without them ever actually touching it. And they'll pay you interest on that. So it varies and it really depends on how aggressive you want to be. I'm very conservative at the between 6 to 8%, but you can go super aggressive and with a little bit more risk and get up towards a 20%. But I am completely happy to be headache free, hassle free at the 6 to 8% mark.
And are these companies exclusively crypto focused on this lending, or let's say you have cash and you want? I know there are a lot of companies out there that do that, that you can go through and just lend personal finance for people, personal loans. Is it exclusively tied to crypto?
Yeah. So I mean, what you're talking about, I'm sure I don't really know anything about that. As far as the crypto goes, yeah, if you wanted to take your cash, the nice thing about turning it into, let's say, Bitcoin, though, is you keep your Bitcoin. So your Bitcoin continues to go up in value. So, buying in at $3,000, now it's, I think, 45,000. So you get that appreciation while still getting that passive income from the interest you're earning. But I don't like the crypto space for the appreciation or anything like that. That's not why I'm doing it. I really I felt like the real estate is where I could make my money, and then the crypto is really where I could keep it passive and not have to deal with any headaches.
Gotcha. Wow, what a remarkable story that it's just really something. Now the 15 properties you're still holding on to, are they more passive than sort of the bulk of the other ones that you sold?
Yeah, so they were all my A-class properties.
That's what
so
I thought. Okay.
I kept all of those. It's not the smart decision. Like money-wise, it's probably doesn't make sense, but I actually paid off all the loans on them, so I owe zero on them. So I can just sit free and I don't have to worry about anything. There could be a crash. It doesn't matter what happens. They all cash flow wonderfully, and it's just a nice place to be. I also, when I was doing a lot of deals, we had a really great disposition strategy. I was really all about building systems, so I didn't have to do it myself. So what we would do is we'd turn on the marketing and try to generate as many motivated homeowners who would look to sell their property, and then our acquisition manager would go out, get the house under contract, and then no matter what price he got it at, he'd always try to get it at the best price possible. But at that point, it'd hand over to our disposition manager, and they would have a really cool flow chart where first goal was to try to turn it into rental. But it had to be things like it had to be in a good neighborhood, the rent ratio had to be good, we had to have crews available, funds available, all this stuff. If it didn't pass that, then the next step is we would then try to wholesale it. If we couldn't wholesale it, we would then wholetail it. If we couldn't wholetail it, we would flip it. If we couldn't flip it, we would do lease options. So I also acquired quite a few lease options, which also turned out really, really well. And I still have those as well, where essentially I get all the benefits of the passive income, the rent money coming in every month. The downside, of course, is I don't own the property. So in 10 years from now, 15 years from now, those homes will be paid off by the people living in them. But the benefit to me is I don't have to worry about any repairs or anything like that along the way. So that was a big key reason we were able to buy so many, is having multiple disposition strategies helped tremendously.
Yeah, that's amazing. So you were basically wholesaling throughout this whole process with these houses. So you were either wholesaling, you do lease options, when you said hoteling, are you talking like Airbnb type things? Or what do you mean hoteling?
Yeah, we do have some Airbnbs, but wholesaling, the difference between wholesaling and wholesaling is, and everyone has different definitions. So this is mine. So wholesaling is when you don't actually close on the property. You get the house under contract, you find another investor that will pay you for that contract, and you essentially act as a middleman. Wholetailing is when you actually close on the property. You go through title, escrow, the whole thing. You close on it, and then you relist the property. The only difference between wholetailing and flipping is a flip involves you actually put some repairs into the property. So you tried to fix it up versus wholetailing. Typically, we may have done a trash out. That was basically the limit to what we would do on a wholetail.
Gotcha. And so you're primarily targeting distressed sellers, right? For the most part. And did you have a certain profile that really worked for you? And you were only doing this in Omaha, or no? Were you still doing it nationwide?
Oh, so I completely shut down the nationwide in 2017 when I started focusing only on Omaha, Nebraska. And yeah, for a small town, there was definitely a lot of distressed homeowners. So that's really where I started learning about data and really honing in on what makes a distressed owner. And that continues to be what I do today, is really get better and better at the data portion of figuring out who is a distressed owner. There's the obvious ones, the pre-foreclosures, the tax delinquent, the code violations, the water shutoffs. These are good indicators that the homeowner is in distress. But the problem with today is that I actually looked it up right before we joined this call. If you go to biggerpockets.com/stats, it shows you how many new members they get every single day. And it's usually around 1,000 new members every day. So if you think about that, there's around 30,000 new members 30,000 new investors every single month.
Unbelievable. Wow.
Yeah, just joining Bigger Pockets. And you multiply that out across other platforms and other things like that. We're in a very, very saturated space right now. And top of that, the technology has come so far where before it was quite difficult to come up with, say, a pre-foreclosure list. Now, within seconds, you can come up with not only a pre-foreclosure list, you can get their phone numbers and their cell numbers and everything else. And so it's just we're in this perfect trifecta of a lot more investors right now. Technology and the has come a long way to make it easier to market to these people. And there's just not a lot of inventory. Home prices are super high, and people want maximum for their dollars. So yeah, we're living in a very tough time to be an investor, but that's what we're focusing on today, and where I've transitioned my time to is trying to figure out, okay, what did I do to get my success, and how can I do this for others? And it's really hard. I have a team of, I think we're up north of 80, maybe we're at 90 people now, and we still have a hard time, but it's still doable. I mean, it definitely is still very possible. We do thousands and thousands of leads every month of motivated homeowners who need to sell their house and property.
Hey, fellow old dogs, are you paying attention to what's happening with Bitcoin and digital currencies? Smart money investors are buying, trading, and holding cryptocurrencies within their retirement accounts while not worrying about taxes. Just recently in the news, Visa reports that more than $1 billion worth of cryptocurrency was spent by consumers globally on goods and services through their crypto-linked cards in the first 6 months of 2021. And Twitter founder Jack Dorsey reveals plan to make crypto the native currency of the internet. As you can see by the headlines each week, crypto is becoming more and more integrated into our daily lives. The smartest investors are investing within their IRA or 401k retirement accounts. The easiest way to do that? iTrust Capital, the #1 crypto IRA and 401k platform in America. iTrust Capital has over $1 billion of assets under management from happy account holders. Why? All iTrust retirement accounts allow you to invest and trade your crypto and gold tax-free on their 24/7 platform. If you have an existing IRA or other retirement account like a 401k, you can roll those over with no penalty or taxes. iTrust Capital makes investing in crypto safe and easy. You can log into your account 24/7 and invest at the push of a button. Now, crypto can be traded as easily as stocks, no private keys or complex processes. iTrust Capital also makes investing in physical gold and silver easy. iTrust uses a blockchain ledger that gives you digital ownership of physical gold held at the Royal Canadian Mint. This is not a security, derivative, future, or other financial contract. This is fully backed by physical gold that is deliverable upon request. And the best part? iTrust Capital has low, transparent pricing that is 90% cheaper than comparable options. So if you are looking for an IRA to trade cryptocurrency and precious metals tax-free, go to itrustcapital.com, and if you use promo code DAWGS, D-A-W-G-S, you will get your first month free and a free crypto IRA and gold IRA investor's guide. So once more, go to itrustcapital.com and use promo code DAWGS for your first month free and to receive their crypto IRA and gold IRA investor's guide at no cost.
Are you doing things like data mining to find these, these gems out there, or are you just using existing lists that you acquire?
Yeah. You like hit my hot button. I love talking about data. So, you really have to do everything. There are some great resources out there. PropStream, ListSource. These are the Property Radar. I love Sean O'Toole. They're incredible resources in the single family home space. The only problem is there's a million other people that have access to that data. So we have to take it a step further, and we have to go on to county websites and build out web scrapers. So we do a whole lot of that. We have a ton of developers that's all they do is they scrape websites and try to get harder to get lists. And then on top of that, the third piece is really trying to predict based on demographic data, based on property characteristics, looking back at historically what a distressed homeowner looked like, trying to match that to all the data points we have on a homeowner and saying, we think this guy's going to be looking to sell here in the near future. So we take all of that and add those different factors up and say, okay, here's who we think is going to be selling. The biggest key, though, and something that I think every person can do is actually start a layer back from that and really try to figure out the best zip code. If you're going to do one thing, instead of trying to figure out that perfect person, if you just step back and just try to figure out the perfect zip code, where is the best zip code to target, that's going to get you way farther than just trying to essentially, instead of trying to find a needle in a haystack, you're finding, you made that haystack a lot smaller.
And are you still including C properties in your acquisitions or your wholesaling?
I stopped completely. So I currently don't invest anymore. I fully focus on just doing this marketing for others. But absolutely, the investors that I work with, it's easy money. I mean, I've listened to quite a lot of your podcasts, and one of them I think was on how would you something about $1,000, like what is it?
Getting started, in real estate for $1,000, right?
I thought you had one specific podcast on like a dozen different ways to buy a house for under $1,000.
Yes, yeah.
Yeah. So I bought plenty of homes for $500 and went around and resold it for $10,000, $11,000, $12,000.
That's awesome.
Those homes exist. So I think absolutely for people starting out who don't have a lot of money, those homes, they do exist.
That's awesome. That's great to hear. Wow. So, okay. So then we kind of making a transition here. You now have created this company called Go for Close. Now, is that where your 80 employees are located?
Exactly. Yeah. Sorry for not making that clear.
No, it's okay. Well, that was like the next step, right? So somebody can come to you and you can set up this marketing machine for them so that they can get these leads, or do you actually close the leads as well? I mean, how far do you go on that process?
Yeah, so we just do the marketing. So the way I see it is, I mean, there's 1,000 different niches in real estate, but if you have a typical real estate investing business, there's marketing, there's sales, there's dispositions, there's transaction coordination. So those are the four key roles. If you keep, the property management or the construction, there's the total of six if you have all of those. We try to take over the marketing component. And the reason I chose that was that is something that a lot of real estate investors spend all their time doing, especially in the single family home space, where they spend all their time trying to figure out ways to contact homeowners, cold calling and sending out direct mails and figuring out the best list. And that's not really where a lot of real estate investors shine. Where they shine is being creative on the talking with homeowners, solving problems, coming up with really great solutions, raising money. These are the things that real estate, like when somebody dreams of being a real estate investor or making money, it's those actions. So what we've done is really we try to fulfill all of those marketing components so we can essentially set up qualified appointments, and then the real estate investor can just go on those appointments and focus on the things that they're good at. So we take it all the way up to setting up appointments.
That's great. And do you help them find good markets? I mean, let's say, hey, I want to do this, but I have no idea where I want to do it. Do you also do that too in terms of, recommending markets that they can go into?
Yeah, I actually I love data. So essentially what I did was I combined all of the data we have, as well as all the MLS data, as well as all the demographic data. And I just made a free tool that anyone can use to kind of look into it for themselves. The first thing, though, that I always recommend for folks before they pick a market is I even tell them to step back and figure out what you want overall before you dive into a market, because so many people get into, say, wholesaling or fix and flipping when really they wanted a rental portfolio. So if you want a rental portfolio, you really should be targeting a different market where you could build a great rental portfolio. And it doesn't really matter how much money you could make buying properties. You need to find that good property management company and other things. So it's easy to jump in and find the best zip code. That part to me is easy. The hard part is figuring out what you want, what your end goal is, and really staying focused on that and what your talents are, and building out your business around your talents.
And so the rental investor would benefit from this as well, in terms of finding not only a good market for what they're doing, but they're still off market properties, so they probably are going to come in under market in their purchase price, right?
Yeah, absolutely. I mean, that was the coolest thing about buying my rentals is I got paid every time I got a rental. Which is kind of wild, but I'd be buying all of them at under market price. And so I would work with local banks who would be loaning me 80% of fair market value. Well, if I'm buying them at 60% of fair market value, I would often get a check at closing when I bought a rental property, which is pretty awesome. And that was really the way could scale was not only wasn't I using any of my own money to pick up the rentals, I was actually getting paid to buy. Like, it's crazy. Like, real estate investing is incredible. And once I got a few dozen properties, I was able to get a line of credit and use lines of credits to purchase the homes, do the rehab, and then I really got paid when I refinanced. So yeah, there's a lot of ways. Buying them at a discount, though, really opens the doors and allows you to really make things cash flow.
That's brilliant, man. That's really great. Well, you've done so many different types of businesses, or it has evolved tremendously from when you first bought that first house. What would you say is maybe one of the biggest mistakes that you learned from in this process that you really, once you learned from it, you were able to sort of change directions or be a little bit more focused?
Yeah, I think I've mentioned a couple of major mistakes. The largest, though, was really I was always fully committed. And I think that was truly the reason for my success was I had zero doubt in my head that it would work. It was just a matter of being committed and then figuring it out. But at the beginning, I was buying homes all over the country, and I worked hard, and I really didn't see my family or my kids. And it was all, I don't want to say for nothing, but it wasn't where I wanted to end up. I wanted to end up with passive income, which was through a rental. I should have been started with rentals at the beginning. So I think that's the first thing, is really get crystal clear on what you want before you start. The other thing was when choosing the market, I focused so much on the data that I forgot the most important, which was a good property management company. If I was to do it all over again, I would first find a market with a great property management company, and then look at all the data and be like, yep, okay, the data looks good here. I'll move forward.
Gotcha. And conversely here, what would you say your biggest success was, or decision that you made about something that just really transformed your business?
That one's pretty easy. That is, I did not try to do it all. I focused on one thing, what I was good at, the data and the marketing, and I hired for every other position. And I had the luxury of making a good amount of money at my jobs, and so I was able to do those hires. But even if you can't do that, partnering, but bringing in the right people who have the skills that you don't have. I've talked to a total of 2 homeowners my entire career. I'm not good at sales. I'm not good at talking to homeowners, and I realize that. So yeah, just staying focused on what you're good at, what your talents are, is huge.
Wow, that's great stuff. Great stuff. Our audience are primarily folks that are 50 years of age and older, and they're interested in a number of different things. Some are approaching retirement. They're concerned they might not have the funds there to really make the retirement that they really want to have, or they're people that are already retired and they're realizing that maybe they've got the nest egg already, but they want to keep that nest egg, growing and so that they're not just draining it, but they're, it's producing for them as well. Some want to be active investors, some want to be passive. I know that's a broad sphere there, but what kind of advice would you have for those based on your experience? Would you think would work for that particular audience?
I talk to a lot of investors, and it's interesting. I'll talk to this dentist who has a very successful business, and he wants to get into wholesaling. I'm like, why, man? You're making tons of money. You're doing great. Keep your business and just syndicate. Go buy into a large apartment complex where somebody else is doing all the work, and you can sit back and just enjoy that money coming in. And then I'll talk to another person who is a natural salesperson and just wants to be investing money. No, man, you're a great salesperson. You should absolutely be working the phones and using your skills. So I really think is don't essentially do what you're good at. That's such a broad statement and sounds cliche, but it has worked really, really well for me of staying in my lane and outsourcing the other components. Real estate investing, I think most people don't realize it's a business. It's not a hobby. It's not it's a real business, and you have to treat it as a business. And you got to be honest with yourself of where you would be good in that business. I love the book Traction. Read that book and understand, are you the visionary? Are you the integrator? What role should you be in? And don't start a business if you're not in one of those positions.
That's great. Great advice. Great advice. Well, this is, we were talking a little bit offline before we signed on here. And you mentioned to me that you are actually going to be moving. You want to give us a little rundown on that? Okay, so you've got this huge company, 80 employees, and you're leaving the country. So give us a little background, what you're doing and how you're going to, how you're going to continue to run this business and accept, being on the road here.
Yeah. So I wasn't planning on talking about this, but that's fine.
Oh, is that okay? Was that too?
That's great. So I was just in Italy traveling, and we're just looking at our home value here. It's near the beach in Southern California, and like, man, this home prices are crazy. What would happen if we just sold it right now and see what happens with the market and live here in Europe? And so we, while we're on vacation, we make that decision. We call up the realtor. She lists it. It sells the next weekend. We accept the offer, and and so now we're planning on making the move here. As far as running the business, it's incredible when you do what you love. It really is. When you wake up and you're just excited about what you're creating. And I have, that's where I'm at, is I get so excited about the opportunity of helping investors fulfill their dreams. And I have one person down in actually San Diego, and so we're not too far. So we met up for lunch, and in the middle of lunch, he gets up, he orders another meal, and goes across the street. He didn't think I was looking, but I saw him do it, and he gave this meal to the homeless man. And seeing the hearts people have, and it's just neat. It's really cool when you can help people outside of yourself. And so, as far as living abroad, I know I'm all over the place here, but it's bringing it back. It doesn't really matter where you're at. So I do everything remote as right now. So it doesn't really matter if I'm in another country helping people or if I'm living by the beach. You can do it from anywhere. And
do you sort of anticipate how much time in the course of a week will you actually be putting into your business? Are you going to be working 20 hours a week, 10 hours, 4 hours? Do you kind of have a gauge on that?
Yeah, I just went on vacation for 2 weeks and I hated it. I didn't hate it. I had an amazing time, an incredible time, but I was on the boat and being like, okay, when can I get off? Like, it really is, it is really, I guess, the next level. Like, I have a friend who owns about 500 million worth of Bitcoin, and all he wants to do is help others. And that, I feel like that's where people get to once you've achieved success, and then you have that retirement moment. You're like, well, this is boring. Like, and then it comes, what do I do next? And it really does become about helping others. And so, I work right now. I wish, I don't wish. I would be cool to say I work 2-3 hours a week. I don't. I probably work 80 hours a week because I love it. And so when I move abroad, I get to work more, which sounds crazy, but it doesn't feel like work. So we've talked about it. I'll be working through the night, which is perfect. It's what I love doing.
That's awesome. And what's sort of your long-term play here for your business? You've got this great machine going here, and 10 years, 20 years down the road.
Yeah, one of the things that I did at my corporate job, it was such a big company that I always saw all these silos of everybody recreating the wheel. And I see that today in the real estate investor space, where everybody is recreating the will, whether you're doing multifamily or single family. I can't solve all of it, but I really want to kind of create a will that works for the marketing component and be that go for clothes, be that place that people can come to, whether you have for free resources or for paid resources, where you can come and be like, okay, this is how I do it. Here's the will. I just got to put this will onto my wagon and take it where I want to go. So that's where I'm not going to stop till I get that, because I think that'd be truly incredible when people aren't always constantly recreating the will. Yeah.
So, for example, I invest primarily in multifamily. So if a multifamily guy came to you and said, hey, can you help me find off-market apartments? Are you set up to be able to handle that?
That's not currently. So that's the 10-year goal of being able to fulfill a lot of these other niches, whether it be mobile home parks or multifamily or storage units or all these different things. Currently, we're only focused on single family homes. And we have a lot more work to do. But in the future, that's where we want to be.
Very cool. Very cool. Well, our time has just zipped by here. This is crazy. There's so much great information here. We have a segment we call Wrap It Up, where we ask you sort of like a lightning round, ask you a lot of quick questions about resources that you like and that you can hopefully share with some of our audience here. If you're ready, we can go ahead and wrap it up.
All right, let's do it.
All right. Favorite real estate book?
No question. John Burns, Big Shifts Ahead. I idolize that man. True genius when it comes to understanding the demographics and the real estate trends. Highly, highly recommend that book. And if you don't want to read the book, he has a free newsletter. So go over to John Burns, consulting.com or something like that, and subscribe to his newsletter. Absolutely fantastic.
Excellent recommendation. How about just a favorite general business book?
Oh, man.
I know you're talking about Traction, but...
Traction's good, for sure. I recently read, and I guess that's why I'm recommending it, Dan Sullivan's Who Not How. Absolutely love that book. So simple. Find the who, not the how, but it's definitely worth reading.
Excellent. How about a website that you use for your real estate investing success? Is there anything in particular that you tap into?
There's just an insane amount of data on county websites. So whether you're doing multifamily or single family, commercial, doesn't matter. Everything's there on the county website. So I will say that the harder it is to get, the fewer people that are doing it. So go onto your county website and start digging, and it's incredible what you can find.
Yeah, that's and it is hard. It's sometimes you have to have an actual property that you start with. They won't just give you a bunch of data. At least I've found it's some of them are really archaic, and then but I think if you can get into that data, it'd be amazingly successful. That's good stuff. How about a favorite app? Anything on your phone that you use a lot?
I shouldn't say it, but I'm addicted to chess. I love chess.
That's great. So get your mind thinking strategically all the time.
It's the worst.
I love it. How about a favorite quote?
I heard this yesterday, so I'm going to butcher it, but it's something like, if you don't look back on yourself and think, wow, how stupid I was a year ago, then you must not have learned much in the past year.
I love it. That's a great one.
Yeah.
All right. Now this one should be easy for you here. If you lost absolutely everything, all your assets, and you had to start all over with your real estate business, knowing what you already know, and all you have is $1,000 in cash, what would you do with that $1,000 to relaunch your real estate investing business?
I would find the person that I want to emulate, the person I want to copy, the person that's incredibly successful doing it today. And I would use that $1,000 to buy a plane ticket and some hotel rooms, and I would just go and pester that person or buy him lunch or do whatever I could to be around that person, go work for him, and do that. I would more than likely go into some very large multifamily. And since I know nothing about that, that's exactly what I would do.
Interesting. Now, did you have a mentor early on when you started?
I did not when I first started. I didn't know about wholesaling. I wish I knew about wholesaling. If I had a mentor, I very likely he would have said, why are you buying and then reselling all these properties? Just wholesale it. But you don't know what you don't know. I did end up hiring a mentor when I went into the single family rental space, and he helped me tremendously. There was I approached him. I'm like, look, I really don't need a coach. I just want somebody on my boardroom, a CEO who I could run things by and be like, yep, that's a dumb decision or that's a smart decision. Really for that confidence of, I'm making the right decision or the wrong one. And it worked out really well.
Just like a sounding board, huh? Somebody can bounce it. I love it.
Yeah.
Wow. Well, I'm sure there's a lot of folks here that want to find out more about you, about your business. What's the best way for folks to do that?
Yeah, I go over to my website, goforclose.com, and we have some great resources, including that, how to pick the right zip code. That's probably my favorite resource that we have there. And if you want to book a consultation with me, it is honestly my favorite part of the day. So if you just want questions and you have no interest whatsoever, I'd still want to talk to you because it's the best part is talking with investors, seeing what they're doing, and I always learn something as well. So that's a place to go. Goforclose.com.
I love it. Wow. Well, this has been a blast. Really, I can't thank you enough. I guess you already know we have a tradition here, right? That our guests get to close us out with their best old hound dog howl. And are you ready to give us your best hound dog howl, Josh?
There we go.
Oh, I didn't hear. Try it again.
All right. I think what's happening is I'm using this cool little app because I got 3 kids running around called Crisp, and it blocks out background noise. I love it.
Oh, no.
So it's blocking out my dog. Here we go. I'll try it again.
Okay.
Ooh!
There you go. That was great. That's great.
Awesome. There you go. So that app works. There we go. A free tidbit for the end. If anyone's on the phone through all these Zoom meetings, if you download Crisp, it's free, and it blocks out the background noise, including dogs.
No way. That is crisp. See, I know if I got on here, you're going to give me some good stuff that I can use. I can use that when I'm recording. My dog always starts barking. Love to sit here with me when I record, but then all of a sudden it's like, oh my gosh, they start barking. I love it. Well, thank you so much, Josh, for being on. This has been a great show. Really appreciate it.
Bill, I can't tell you what an honor it is, and the wisdom that you bring to the table. I've listened to so many of your podcasts, and I love them. You're a talented at what you do. So thank you so much for having me on.
Oh, that's a pleasure. Completely mine. And I also want to thank all our old dog listeners out there too for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Please note, everything that Josh talked about today will be outlined in detail in our show notes on the Old Dogs website at olddogsreinetwork.com/blog. And you're going to look for the episode with Josh Miller. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.